Hey, everybody. It is Chuck Barone, Thursday, September the 26th, 2024. A wild day today, guys. You see anybody of you guys see some of this stuff today? Lots of data coming down today. Powell's speech was a pretty big letdown. I was really hoping we could get something of benefit out of that speech. It wasn't to be. He actually sent a pre recorded speech, didn't appear there live, which was disappointing, and did not touch on monetary policy, talked about how the Fed tried to save the Treasury in the 2008 crisis and 2008, blah, blah, blah. Nothing relevant to where we are today. Interesting. Anyway, today was a wild one. You saw, wow, seems like everything coming up roses for the Fed, guys. They seem to be having everything their own way. I don't know if they're like the ones in charge of putting the data out nowadays. Are they the ones who do that? I don't think so. These different government departments. Interesting because everything just, you've heard me talk about the paradox, how, there's for everything good that gets reported, we get something bad reported. For everything bad, something good. And it's just been this crazy paradox of which frickin' way are we going, So today was one of those everything going good days. And the market reacted like crazy. Dow Jones jumped 260 points, 42,175. NASDAQ jumped over 100, 108 today, 18,190 on the NASDAQ. The S&P goes up 23 points, 5,745. So new records all over the place. They got, the stock market really believes that this bull has still got plenty of legs left. And a lot of the data coming in supports that belief. Did you see the Commerce Department revised earnings today? Big news. I'll talk about that a little later in the show, but it just shows that corporations in the U.S. are doing very well, man. They're earning money, guys. And this is what's going to be interesting to see is this new revision on earnings, how it's going to affect PE ratios. It's going to bring them down a little bit, which is going to be interesting to see where everything lands, because it's going to create some bargains, right? If a stock's selling at a 25 PE and they recompute these earnings, and now that PE comes down to 20, guess what? That now, or even further, that stock becomes pretty attractive because sooner or later it's going to be back up at 25 times earnings. So in craziest times I've ever freaking seen, but there's some opportunity in this market for sure. The bond market today, people weren't buying bonds today. They were selling bonds. So yields coming up a little bit, mostly selling the shorter term stuff now, go figure. So the longer term, the 10-year was up just 1 basis point, sitting today 3.79%. At the same time, the 2-year was up 6 basis points. So now it is at 3.61%. So you have now first it was inverted, 2-year higher than 10. Then it got straightened out, 10-year higher than 2, right? And then it was so narrow, it was 1 basis point. Then it spread out and now narrowing again. We're going to have a little bit of that, but this bond market is irregular, for lack of a better word, irregular. The dollar today down 38 basis points on the index, 100.55. Dollar hanging in there, doing a good job. I think the dollar, we have a chance of having it our best here, the best of it, because we're going to see rates continue to come down. But I think if everybody else in the world is also lowering rates, except Japan, that's going to cushion the dollar from a big fall like we would see if the U.S. was the only place cutting rates, right? So interesting, again, just more crazy to try to figure all this stuff out. Precious metals today, gold rallies up again, man, up $15.80, $2,673.50, heading toward $2,700 for gold, guys. Crazy, unbelievable numbers. Silver rallies 27 cents, $32.03 for an ounce of silver. Happy to see silver getting that consolidation, solidifying itself above $30. once we have that, guys, it's going to be pretty hard to get silver back down below $30, which opens up more buying opportunities when there's less risk. You know that goes, right? Interestingly, I was checking this out today. So far this year, since January, gold is up $764 per ounce. Wow, man, that is just amazing, amazing, amazing stuff. This bull market in gold, and the good news, guys, it's still got plenty of legs, still plenty of room for this bull in precious metals to run, especially now. Well, we'll talk about why a little bit more later in the show. Gold or oil today, man, oil took a tanking today, down $2.43 per barrel, now at $67.20 for a barrel of West Texas Intermediate. Price is really coming down on oil. Worried about recession, worried about demand, worried about everything basically. So oil really weakening. I've told you guys, we expect it to stay between 70 and 75. I expect it'll rally back up a little bit, but I've been telling you guys, the bias is down, down, down on oil prices. Bitcoin today rallies up $1,614, $64,868 for one Bitcoin. Getting ready, guys. Bitcoin going to make a big run at 70,000 again. Going to happen any second now. I don't see this 64, roughly 65K as the top here. It's going to happen. Let's see if it can make it. All right, so let's talk about all this data today, man. We got a lot of data today. First, jobless claims. Oh, this was the one I was waiting for at 5:30 in the morning. Interesting. Jobless claims falling by 4,000 from last week, coming in at 218,000. That's a 4-month low, guys. Experts expected 225,000. Jobless rate also coming down from 4.3 to 4.2%. Now that's still up from the 3.4% it was back in April of 23. That was the low 3.4%, but still a super low unemployment number. And Powell, we remember when Powell was talking after the big FOMC meeting, Powell said that half-point cut was to demonstrate the Fed's commitment to keeping unemployment low. Well, looks like they're going to get their wish because unemployment. Now let's see. This is just 1 month doesn't make a trend, but it looks like the spike in unemployment claims at least is kind of now the spike is over. Now we're going to figure it out, consolidating somewhere, and let's see what the next move up or down is going to be. It looks like companies are not really hiring like they were, so the job opening numbers coming down, the amount of hirings coming down, but at the same time, they're not disposing of their employees like they were, so the amount of layoffs and people losing their job coming down at the same time. Interesting stuff, they're with this rate cut, the Fed rate cut, 54% still betting that we're going to get a 0.5 point cut in November. Even with the job, the dual mandate they have, low inflation, stable dollar, as low unemployment as they can get, stable job market, right? Looks like they're doing a pretty fine job on both of those right now. I mean, according to the government numbers, so please don't roast me on this stuff, okay? But inflation numbers coming down, you can see that reflected. We're not seeing the spikes in prices we were seeing. Sadly, the numbers are still inflated, and that's going to be a long time, if ever, before that actually, if ever, comes down. But it looks like employment's straightening out. It's going to be interesting to see where we're at moving into November past the election, about how much we're going to get in November and December as far as rate cuts, if we're going to get anything at all. Commerce Department today, this was the interesting thing today. The Commerce Department revised corporate earnings, and they are up in a gigantic big way, guys. Usually these revisions are done very quietly on a Friday, and they're revised down bigly. This one, it was quiet. I didn't see a lot of, horn tooting about this. But listen to this. They've revised corporate earnings up from a revision from 57.6 billion corporate earnings to 132.5, more than doubling what they thought corporations earned in the second quarter. Now, the sharpest up was for non-financials, which they're hoping then will lead to more investment in, factories and building businesses and that kind of stuff. So that was really interesting. Now, if you guys really want me to, say so in the comments or in on the chat here, and I'll do some research and go into the real details of how they revised that like that. At the same time, gross domestic income comes out in the same report, also revised higher to 3.4% for the second quarter, up from what they thought was 1.3%. So big misses to the downside. GDP, final GDP today, we got 3% for the second quarter. So all of this stuff, jobless claims stable and falling, corporate earnings solid, incomes rising pretty dramatically, GDP 3%. I checked today, GDP now, Atlanta Fed believes that the U.S. will have 2.9% GDP growth for the year of 2024. So you got a strong economy going. Okay, 2.9% is higher than the Fed likes GDP growth, which I think they like around between 2 and 2.5 max. So with all of these things, right? Jobs good, earnings good, people earning more money, inflation numbers coming down. Tell me this, guys. Why would the Fed cut rates into that? Rate cuts, especially big rate cuts like, a half point or 3/4 of a point like the Fed's been doing. This half point cut, why would they do that into a strong economy? That never works out well. Never works out well. So I'm waiting for the other shoe to fall. I'm waiting for the other, however the phrase goes, because this doesn't compute. This doesn't make sense monetarily. And I'm certainly no scholar. I'm no Princeton grad like Powell. But this is really strange stuff, man. Because we have the economy going well. Typically, the Fed is raising rates into a good economy, not only to slow that economy down and prevent it from overheating, but to set them up for rate cuts when that economy starts to falter, right? So very strange to see cuts into a strong economy. And that, my friends, is how you get inflation. Because now you're going to have more economic activity. More people are going to be willing to borrow money. Maybe they did it as a stab at trying to save real estate, because real estate mortgage rates are coming down. But it's just the oddest thing ever. It's just very strange. All right, a couple quick ones before we get rolling. S&P 500 threatening something that happens pretty unusually this year. S&P threatening to gain 20% or more for the second consecutive year. Now, the last time this happened was in '98 during the big dot-com boom. Everything was going up like crazy with dot-com mania. Interesting, because that's the last time the S&P gained more than 20% in 2 consecutive years. That was 26 years ago? Interestingly, before the 1998 2 consecutive years, the last time it happened before then, 1955, during Eisenhower's administration. So very unusual to see, just if it happens again this year, the S&P manages to do it twice, 20% gains 2 years in a row. It'll only be the second time that's happened since 1955. Crazy, right? Debate today now, the big debate in the markets and everywhere, the talking heads on TV, all they want to talk about, guys, is how low will rates go? What's the terminal number? What are the rate cuts going to look like this year? What's the neutral rate? What's the Fed's target to end this cutting cycle? That's all everybody wants to talk about. I'm already kind of sick of it. We'll see. I mean, that's not really something I would really concern myself with right now because, I mean, I guess if you're betting in the market and you want to play that game, okay, well, where does it end? And I want to play some bets that way. That's just not as for a regular normal investor, 401k person, an IRA person, guys like us. Not a real smart way to invest, guys. Don't do that. World moving back to normal, guys. And when I say normal, it's a different normal than most people think. When people think normal now, they think pre-pandemic. Pre-pandemic normal. No. What we're going to go back to now is pre-2008 crisis normal. And I'm not talking about the ways of the world I'm talking about finance and money. Because we're going to see a world where money's more expensive. We're not going to get back down to those ultra low rates. We're not going to get back down to those zeros, 3% mortgages, 0% return on your friggin' savings. Rates are going to stay higher. Savings is going to be more valuable. So the advice we've been giving you guys still goes. Try to stash 10% or more of your income if you possibly can. And try to keep that. Once you build your $25,000, your FU money, which you guys have heard me talk about a million times. Once you build that and you keep that liquid, go invest that money. Build yourself. Build your empire, guys. Powell's speech, as I mentioned, was pre-recorded. Very disappointing to everybody there. Did not talk about monetary policy at all. Durable goods, we got that report in today, came in flat, which was actually very good news for durable goods because they were expecting a gigantic loss. A gigantic decline, I should say. So durable goods beating expectations. State Farm freaking everybody out in California. More talk of pulling policies, basically trying to limit their exposure in the state. Talking about dropping 1 million policies in California. They only have 3 million there right now. So basically, State Farm talking about shrinking their portfolio in California of insured properties by about a third. That's not great news for California. This insurance crisis is getting out of hand. We got a big hurricane hitting Florida right now, I think, as we speak. Another one following right behind it. Insurance is going to be brutal in Florida, Texas, and Louisiana, the states around the Gulf that get hit with these hurricanes. As I mentioned yesterday, guys, it's crazy. When Hurricane Andrew hit Florida, I lived in South Florida. Actually hit 19 miles away from my house. And that was the first hurricane to hit Florida in over 40 years. Now they've had 5 hit Florida in the last 3 years. Something strange happening in Florida for sure. And lastly, guys, before we wrap it up, tomorrow's the big one. Tomorrow we get PCE. Yeah, the port strike. Good idea, Dave. That's hopefully they're going to fix that. I think if they don't, the administration's going to get involved. It could make a giant mess of supply chains, and you could see just from that strike a giant spike in inflation. But I always want to be on the side of labor here, so I am sympathetic to the strikers. They're just trying to make more money, as we all are. So we'll see where that goes. We'll talk about it. If you like, I'll talk a little bit more about that tomorrow. And lastly, PCE tomorrow. We know that's coming. That's going to be the one, man. It's the deal. It's the number. And I think we'll get a good report tomorrow. I don't care. I think the Fed was confident we were going to get a good report this month. It's next month's the one I want to see, where the markets had time to digest the rate cut and to see what inflation looks like then, 30, 90 days after the rate cut. Anyway, guys, that's it for the day. Much, much, much appreciated everybody being here for your support. Please hit the thumbs up, hit the like button on your way out, guys. It changes the algorithms around. It helps us get more views. I'll be on comments today. I've been trying to get on there, answer your guys' questions if you have any, and respond to your comments. Much love to all of you guys for hanging in there. Thank you guys, Smoke, Dave, and all the rest of the guys for being here on the chat. Back tomorrow, guys, to bring you the news you need and wrap up a crazy freaking week. Until then, everybody, take care.